Hi, my today's topic is objectives of financial management. Objective of financial management is to ensure regular and adequate supply of funds to the concern, to ensure adequate returns to the shareholders, which will depend upon the earning capacity, market price of the share, expectations of the shareholders, and another one to ensure optimum funds utilization. So these are the some main objectives of financial management. Mainly on the basis of these three details or these three objectives of financial management, it has been categorized into two. Mainly one is a profit maximization and another is a wealth maximization. Main two important objectives of financial management are profit maximization and wealth maximization. In today's class, I will explain about the profit maximization, one of the main objectives of financial management. Profit maximization is a short-run or long-run process by which a firm may determine the price or input and output levels that lead to the highest profit. So it is a process of determination of the price at input and output level of the fund and which will help to earn the more profit. We will look after about the definitions of profit maximization. A definition says profit maximization is a process that companies undergo to determine the best output and price level in order to maximize its return. So it says that profit maximization is the process which the companies follows to determine the price with the help of input and output levels of the fund. The company will usually adjust influential factors such as production cost, sales price, and output levels as a way of reaching its profit goal. So at any time, the company may adjust its cost. The total we call it is a cost or the expenses. The company will try to adjust the some most influential factors. In that most influential factors are production cost and sales price and other output levels. Even with that, the other cost also will be adjusted and to maintain the profit of the company. There are two main profit maximization method, means how the company can maximize the profit or the measures which has been taken by the company to maximize their profit, to increase their profit. They are the marginal cost less marginal revenue method or the total cost less total revenue method. So from the financial point of view, how the profit can be maximized. Marginal cost less marginal revenue. Good. Marginal cost minus marginal revenue. So that is most beneficial to increase the profit. Through that they can increase the profit. Otherwise the total cost minus total revenue method, that will also contribute for the profit maximization. And it is a good thing for a company but can be bad thing to consumers if the company starts to use cheaper products or decides to raise the prices. If the main intention of the company, if it is a profit maximization, of course from the company point of view it is a benefits because they get good profit, good return. But from the consumer point of view it is not good because the consumer gets cheaper products at a high price. The company fix higher price for the lower quality products because their intention is to maximize the profit. And it is a profit maximization is one of the basic objectives of financial management. The main objective or main basic objectives of financial management of all the company is to maximize the profit. Of course, all the business units, they maintain the financial statements or accounting statements or monitoring of financial activities or control of financial activities. Everything is mainly to their intention is to earn the profit or increase the profit. main at the outside, the main purpose of all the companies, or the main goal is reaching the profit or getting the profit or increasing the rate of return, that is in the form of a profit. So that's why the profit maximization is called as one of the main objectives of a financial management. This objective implies that any financial decision would be evaluated on the basis of its overall contribution to the profits or earnings of the enterprise. See, the financial decision would be evaluated, the financial decision will be taken or evaluated based on overall contribution of the company to the profits or to the earnings of the company. The financial decision of the finance management or finance manager is always dependent on how the other activities contribute on the profits, or how that will contribute towards the earnings of the enterprise. So that's on the basis of that they will undertake the decision, or they will undertake financial decision. In another way, the profit maximization will help the companies to take a sound financial decision. The activities which are increases profit should be undertaken, and activities which decreases the profit should be avoided. It is a common for all the companies, or all the companies or all the business units, they will do like that only, that they will undertake the activities or a financial business activity which gives more return in the in the future. Whenever the companies, any activities, whenever it gives more return in the future, that type of activities only will be undertaken by the company. So activities to be undertaken which contributes more for the profit, and the activities to be avoided, some activities to be avoided which are not required or which will not contribute for the profits of the company. So outdated activities for the present business competition, or to the present business and world, that has to be avoided. It's in total, it says that the companies or the finance manager, they have to update themselves to increase in themselves in case of their activities, so that will contribute more for their profits. So some of the measures which will help the companies to maximize the profits by increasing the sales. Through the sales, they can maximize the profits. Of course, there are plus or minus, but totally in brief, the sales will contribute for to increase the profit. Or by reducing the cost of production, every time the company intention is not to reduce the cost of production, the cost of production to be reduced by maintaining the quality of the product without sacrificing or without compromising in case of quality. If they are succeeded in case of reduction of cost of production, then the customer will adopt, or they will accept their product. Later the company will get the good profit. And another one, efficient use of fund, inflow and outflow of fund. Next is minimizing the risk pattern. That is a very important. The return is always dependent on the risk pattern. So if they have taken low risk or moderate risk, of course they will get the good profit. Whenever the risk factor is high, then of course profit is also high, but risk for the invested amount, capital, is more. So they have to undertake the activities where there is a less risk or moderate risk for their capital. So that is about the profit maximization. Let me explain some of the advantages of profit maximization briefly. Profit maximization is a rational as well as natural objectives. Why it is called as a rational? Because it is a mental process, or it is a planning process, psychological concept. So that's why it is called as a rational. Means it is a decision of the top level authorities. And another one is it is a natural objectives. Why it is called as a natural objectives? Every companies or every units, from sole trading to MNCs, there every companies or every business unit purpose is to earn the profit. And another one, it helps to face adverse contingency. So whenever there is any problem, adverse effect on the companies, then it will help the company to overcome that particular problem. And next one is it helps to proper utilization of resources. how the resource, both financial and non-financial resources. So the profit maximization will help the company how to utilize the manpower, how to utilize the fund, and how to utilize the other resources which are available with the company. From main point is profit maximization. Next is it helps for growth and development of the organization. Of course, for the expansion, for the development of the company, the profit is very important. And maximizing social welfare. So again, it will also contribute for the social welfare. For a best example is by contributing to increase the standard of life of the employees of the organization, paying a good salary or a good package to the employees. Through that they can improve, they can contribute for the improvement of the standard of living of the employees of that particular organization. So in other way also they can contribute. Whenever there is a good profit, then the companies will do the some social activities, or we call as a CSR program. Under CSR program, the companies will do good social activities. So that will again, whenever the company earn more profit, so through that they can maximize the social welfare. So these are the some advantages of profit maximization. Next, drawbacks or the limitations of profit maximization. One is it is an outdated objective, and currently the companies are not follow or adopting these objectives. Of course, indirectly, directly they are not adopting. Indirectly, their intention is a profit, earning the profit, but not in the short duration, not in the initial stage. In the long duration, they need profit. Everyone invests mainly for the purpose of to get the return, but they have to wait for a long term period. So not within a short duration, not in the initial stage. So that's why nowadays the companies in the beginning, their intention is not to earn the profit. Their intention is to increase the wealth or capturing the market or existence of their company in the business. These are the other objectives in the beginning. Later, there once they get the success in case of their business, then they will turn their objectives into profit motive. Of course, they need profit, not with the loss they cannot run the companies for a long period. So for the short term period they can maintain it. So that's for it is called as outdated objectives. Any businessman should not enter into the market with or into the business field with the intention of getting profit. They have to enter into the business field with the intention or with the objective of that they must stay in the business. They must stay or they must survive. Then they can, that is the main objectives in the current business world. And it is a vague concept. The profit itself is a vague, that is not a accepted concept. It is a vague concept because that again it is not applicable to present business scenario. It ignores the time value of money. So you cannot, because the time value of money is goes on changes. Later I will come about the time value of money. There is a separate topic related to the time value of money. So it completely ignores the time value of money. You cannot assess the profit. Even if you get the profit, then you cannot say this is my company's profit. So that's why it is, because the changes in the time. Next one, it is not helpful in making a choice between project producing different benefits over a period of time. When you go for MNCs, there are a lot of company, they have a lot of projects. So you cannot specify that this project gives the profit and this one is not gives the project profit. Their intention is not to earn the profit. Their intention is to get the success in their project. That is the main intention, and it ignores the factors of risk and uncertainty. That is important. A business unit is not run slowly with the objective of earning the maximum profit. It's not possible. And profit maximization at the cost of social and moral obligations and ethical trade practices is not good for the business. So social welfare is important at present. It have greater liquidity rather than locking their funds. So there's again related to the how they manage the fund. The workers demand higher wages whenever profits increases. That's another one. The employees demand for good salary, good packages whenever the company earn more profit. And threat to the government interference, threat of government interference in the form of tax, strict regulatory measures, and even nationalization of the firm. So whenever the company earns good profit, then there will be the concept of government interfere or the government enter by through tax, so that as it cannot company cannot skip the tax, so they cannot avoid or they cannot run from the tax. Exploitation of workers and consumers. They sometimes if the company's intention is profit only, then they allot more hours for the workers, and they sell lower quality products to the consumers. Next, profit maximization lead to social inequality because the difference between rich and poor. So that is a problem in case of profit maximization. The effect of dividend policy on the market price of shares is not considered. The effect of dividend policy on the market price of the share is not considered. Again, later I will come in detail about the dividend policies. So these are the different these are the drawbacks of profit maximization. So it says that the profit maximization is not good. That objective is not good for the company, even if it is a basic object, one of the basic objectives of the company, but it is not the main objectives for the company. So that's all about the profit maximization. Thank you very much.